happened in the market today, some of the positions I'm in, and also positions that I'm adding to. As you can see, it was not a good day in the market, but for me, this is the day that I love to see. Also, be sure to like, subscribe, comment down below what stocks you guys are buying. I always want to know. But yeah, guys, I mean, it was obviously a bad day, down almost 5% in the portfolio. Geez, yeah. We've had a really rough past week, down 8%. Past month, we're down 5, around 6%. Past 3 months, we're up. Past year, we're looking all right. All time, we're looking all right. So it only really has been around a year, so that's good. I mean, yeah, we're definitely having a rough week, but that was to be expected with the stocks that we're buying. A lot of misses in earnings actually. Amazon, or not misses, but weak guidance. Amazon came out with some weak guidance. Their stock fell a little bit. Google as well. I actually sold my Google position. I sold my Palantir position. I got out of both of those. And yeah, it was all to build on this one position, Elf. So I think if you guys watched the last video, I talked about Elf and options play I was gonna make on it. I actually ended up not making that play. I should have. It dropped a enormous amount after hours. It was all the way down to $64. It was almost down 30% after hours here, and then when market did open, it was around $65, and it climbed up to 73. It was pretty volatile because of how cheap it was. So you can see you're not a happy camper if you bought this stock a month ago, 3 months ago, or at the beginning of the year, or a year ago, maybe 5 years ago. But yeah, this stock has definitely it's in the gulag right now. It's been through it, but I have built my position out pretty well up to this point. I'm down only around 9% now on the stock. It was around, I think, 35. So yeah, I mean, this is a stock that I do believe a lot in. They're the makeup leader. They're the leader in their industry. They're the most bought product in their industry. And I think they have let's see the financials exactly. I don't want to get this wrong for you guys. So let's see. Elf. So yeah, their PE is a 53, which is high, but this is a company that has amazing growth. Let me see their statistics. So yeah, so guys, their forward PE is in the 20s right now. Look at this company's historical forward PEs. I mean, you tell me, and I mean, this looks like a good deal, right? Because nothing has changed in the company. The growth rates have slowed a little bit. Okay, the company has slowed down a little bit with the growth rates, but besides that, I mean, it's not. This is what we look for. You know what I mean? I mean, these are the companies that we try to find. This is a great company that's doing great things with a great management team that's going through a rough time, but I believe in this company a lot long term, and I mean, I think they're easily going to blow past their all-time high eventually. Keep in mind, all of these plays that I make in my portfolio, all of these stocks that I hold: Amazon, Fubo, Cake, PayPal, SoFi, Celsius, Nike, Shopify, Honest, Estee Lauder, Elf, and AMD. All of these stocks that I hold are long-term plays. These are stocks that I'm looking to hold for years and years and years to come. At least 3 years. Every stock at least 3 to 7 years. So if you guys want to buy stocks for the short term, this is not the place for you. Sometimes I do make a fun options play if I have a little bit of extra money, but that's not my sound strategy. That's not how I'm looking to make money in the long term. So this is what I'm doing. I mean, these are the plays that I think are gonna pay off. The ones that are gonna outperform the market in the long term. These stocks that I have right here, and especially stocks like AMD and Elf and Nike, like all these stocks are really down right now. And every stock I own actually, besides Amazon, are ones that are going through a tough time. And well, some of them are already out of the tough time. I mean, like PayPal is kind of on the up and up now. Cake is too. Fubo is too. But yeah, Shopify definitely. I'm up a lot on that. SoFi is up on the up and up as well. But besides that, all of these stocks have dropped a tremendous amount. Honest is on the up and up too. I've actually been adding to my Honest position. I bought a little bit here today. I'm up 34%. I don't have much in it at all. It's a very risky play. It's a company that is actually, I think they just turned to profitability. No, they did. But it looks like they did turn to profitability and then they actually became unprofitable again. So, but then they were profitable in the last quarter, but expected not. I'm not sure, but yeah, I've just been buying a few shares of this company. I bought around 20 shares today. So, and also I made a lot of big buys on Elf when they fell, because I do believe in this company heavily, and I think it will give amazing returns in the long run. Let's see, I bought a lot of Elf. I bought around 700 right here just 20 hours ago. It was a weird time to buy the stock. It was very late at night, but I bought a lot of Elf stock, as much as I could get my hands on February 6th here, almost $2,000 worth in total. A lot of shares of it. So I'm a very proud owner of Elf. I think they're going to do great things, and this is a great company to buy right now in their space. And let's actually check out the Elf investor slideshow. This is for 2023, hopefully. Oh yeah, okay. Yeah, so let's see the presentation. This is what I wanted to look at with you guys. So we can see on this presentation, I mean, they're gonna highlight the good things. That's just what a company does. But I mean, guys, what? I mean, look at their market share increased. Their adjusted EBITDA is $69 million. Their net sales increased by 31%. And this is, out of all, I don't even know how to say this. This is so impressive. There's 7 Mag 7 stocks, yes? And none of them have grown 24 consecutive quarters of net sales and market share growth besides one. And it's Nvidia. So Elf is on par with Nvidia. I don't know. And they're one of 6 consumer companies out of 546 to grow 24 consecutive quarters, averaging over 20% growth. And they're also the one cosmetics brand out of 988 to gain market share for 24 consecutive quarters. No other cosmetics brand has done that. So yeah, I mean, I could show you that and turn off this video, and I think I'd be pretty convinced to buy the company, especially at the price it's at right now. And you can see their net sales growth rate, plus 40%. You know, I mean, their net sales growth rate outlook is in the 14 to 16% range. They're running for there. They have different areas. They're getting into the digital space. They have an app actually now. They have been in the cosmetic space. They own Elf Beauty, Elf Makeup. They're also in the skincare space, which is actually a big step up, because I don't know about you guys, but I use skincare every day. I'm a big user of skincare. I know a lot of people that do skincare every single day. I know a lot of people that put on makeup, 2-3 times a week. So if they get into that skincare section, they put their foot in the door there, they become a leader in there. That's a lot of reoccurring buying with their products. So I like what I'm seeing there. And also, they're looking to expand internationally. This is a bigger project than just the U.S. Elf is looking to go, overseas, and do different stuff like that. So that's why I think they're gonna take a huge market share. I mean, look at the 5.6 million members on their app, over 3 million downloads with almost a 5-star rating on the App Store. And we can see year over year, not year over year, we can just see in quarter 3, the cosmetics category lost 5% and they gained 16. So even when the cosmetics category is not thriving, they're up 16%. So I mean, there's going to be times, guys, these come in cycles when the cosmetics category is thriving. So what does that mean? Is Elf going to go up just that much more? I think so. So yeah, guys, I mean, this is a company, I could show you guys this good stuff all day, how they sell out at Walmart. They're in Dollar General now. They're the number 1 most productive brand. That means they're in and off the shelves the fastest. They're 10th in the skincare game already. Yeah, I mean, look at all these brands that, are the big leaders in these spaces, and look at how old they are, and look at how old Elf is. So this is not a bad time to get in. Yeah, they outperform their category. They outperform the skincare category, which they're a new member in, and you can see their growth that they have, possibilities to get into their international net sales growth 66%. Love to see that. The international sales growth is that's gonna that's gonna skyrocket here, and we can see the presence they have in these other countries, the new markets. I mean, I could go through this all day, you know. Um, I mean, they're literally just giving their business model as well right here: passionate owners, value proposition, powerhouse innovation, disruptive marketing engine, productivity model. This is their 5 areas of competitive advantage, and they're showing it to us. As I mean, anyone can access this, but they're showing it to us right here. This is, if you can actually put this into a brand and execute all of these things, this is, a billion, hundreds of billions of dollars business. And Elf is trading for what? Market cap of $4 billion. This is a company that I can say without a doubt, I believe if they keep doing what they're doing and they're growing how they're growing, this is gonna be $100 billion company. I mean, I don't see a world where it's not gonna be that one day. And that's a 25x of their market cap right now. So I mean, with the way things are going, with how they're expanding and the new things they're getting into, I see a very bright future for Elf, and that's why I added a lot to my position today. Um, I also added some to Honest. That's a cheaper stock that is actually on my radar. It's been on there for a while. And then also with Elf, I want to say Estee Lauder is a stock that I'd add to. It's another company. I actually sold some. I need to buy some of that back, but this is a company I want to get a bigger position in because they're another cosmetics brand that's in the space that's not having the best year, to say the least. They were at $370. They're about a fifth of that right now at $65. So yeah, not a good time for Estee Lauder either, along with Elf. So the cosmetics brand, or the cosmetics category, is definitely getting hit hard. But this is a category that's always growing. People want their cosmetics. People want their beauty supplies. I mean, that's something that's never gonna stop. Also skincare, I think that's getting more prominent. And these are just like things that everyday people use, and these are easy things to say. Okay, I'm gonna buy a stock of something that people use every single day. And as more people come into the world, other countries become more modern and also get newer technology, and these companies expand to those developing countries that where their population is growing at insane rates. I'm very happy with what I'm seeing from Elf. And then also AMD. I actually bought a little bit more AMD today, not a lot, but I got around, a share or two. Yeah, I got around 2 shares. AMD, it's the same story. I just wanted to go over this one because it's a play that I'm still making and I'm happy to make, and this is a great company that, you know, had another bad earning, because these are some bad earnings, and they're reporting, weak guidance, all these companies, and this happens a lot. Sandbagging, they call it. But these companies will report a weak guidance in the first quarter. A lot of these big tech companies kind of gave out weaker than expected guidances, so that when they do come in and beat numbers next quarter, the stock's just going to skyrocket. So I'm not saying that's going to happen, but it's happened before. And guys, this is also another thing I wanted to say. When you're investing with the strategy that I am, it's not like Wall Street, where Wall Street's looking, what's going to happen next quarter, what's going to happen the quarter after that. That's as far as they're looking into the future. They're just worried about what returns they can get in the next, 3 to 6 months, which is, good for them. Let them do their thing. But as a retail investor, I'm looking to do more than that and hold the stock. I think the returns are exponential on certain companies here that I have, and I'm willing to hold them for a lot more than 3 to 6 months. If it does go up an insane amount, I'll take a little bit of profits. But all these companies I want to be a shareholder in because I love the company. And that should be what determines if you're going to buy a company. If it's at the right price. So as you can see, I have a lot of these companies that are down. If the company is, there's a lot of companies I love that I would want to buy if they were at a lower price. But I have to go by my rules. I can't let emotions affect what I do and don't want to buy. And so I just go by my rules of buying and I say, okay, there's great companies out there that are a little too expensive right now. I'll watch them. If they drop, I'll pick them up. But there's also a lot of great companies that are very cheap right now. There's a lot of companies selling for way lower than I think fair value is, and the market is mispricing them. Wall Street is mispricing them. A lot of people are mispricing them. So there's a lot of companies that I'm confident buying that aren't gonna go lower. And if they do go lower, then I'm investing. Every week I'm investing more and more money into the market. So make them go lower. I'm happy with that. So yeah, guys, I just wanted to I went on a little tangent there, but I just wanted to tell you guys how I felt about Elf Beauty. It's still the buy. It's a bigger buy, honestly. I'd put more money into it now. Can get more shares. I'm looking to get around 100 shares if it stays around this price. 100 shares on AMD. I'm looking to get all my shares a lot higher on these companies that are trading at very cheap valuations. And yeah, I mean, this is just a video I wanted to make. It's Friday night, it's been on my mind, Elf. So yeah, I'm thinking big things for that company. A bad earnings, but I mean, come on. I mean, with all that I just showed you on the investor slide, I think there's no reason not to buy into this company. I can't. It's harder to find a reason not to than it is to find you know what I mean. I mean, it's just I don't know. You guys can make that decision for yourself. But companies like that are great business models, just unbeatable even to the test of time, and they're trading for valuations like that, I'm all in. So yeah, have a great weekend, guys. Enjoy your Friday night if you're watching this Friday, and also if you're watching this another time, enjoy your day, enjoy your night. I'll catch you guys in the next one. Be sure to like, subscribe, and also comment down below what stocks you guys are buying. I'd love to know. Thank you for watching. Peace.